Hello, good morning. You're tuned into Market Cafe with me, Ankita, Saxena, and with me is Kanishka, Sarkar. And the next 1 hour, we'll take you through how the global markets have shaped up and what are the cues you need to keep on a radar before the start of these today. But first up, let's take stock of how Wall Street has fared. Kanishka, Wall Street was little changed. In fact, we did see some losses also coming in on Wall Street. Now we are waiting and watching out for that speech by Jerome Powell after Jackson Hole. So that's something that we have to watch out for. But for now, the markets are really watching out for that right now.
Absolutely, very subdued movement. But, it was a fifth day of decline coming in for the S&P 500. Now, all the indices closed lower on Thursday, with the S&P 500 falling about 0.5% for the fifth day in a row. As I said, the Nasdaq composite, that is the tech-heavy composite, that slipped about 0.3%, and the Dow, that lost more than 150 points as markets were extending their losing streak ahead of, like you said, Fed Chair Jerome Powell's key speech at the Jackson Hole Symposium. Now the street is betting on a September rate cut, with futures pricing in a 74% chance. But with inflation concerns lingering and Fed minutes showing a divided view among policymakers, Powell's tone will be crucial. That's the view and the market right now. Now, adding to the pressure, of course, Walmart shares fell over 4% after an earnings miss, while tech stocks like Nvidia, Palantir and Meta, they continue to see profit taking. Now, heading into today's trade in the US, all eyes will of course remain on Powell's speech, which could set the tone for the risk sentiment and the path of US equity. So that's how the US market setup is looking like as of this morning.
All right, so that's how the U.S. market shaped up. And let's go across and see how crude is faring. Now, oil prices rose on Thursday, boosted by signs of strong demand in the United States, with certain uncertainty over the efforts to end the war in Ukraine also lending some sort of a support. Now, Brent crude futures rose 83 cents or 1.24% to close in at $67.67 a barrel. The WTI gained 81 cents or 1.29% to settle in at $63.52 a barrel. Now, both the contracts climbed over 1% in the prior session as well. We do have Russia that came out on Wednesday and said that the attempts to resolve security issues relating to Ukraine without Moscow's participation were a road to nowhere. So that is something that we are watching out for, the entire Russia and Ukraine tussle that's been going on, and US's effort to end the war. But for now, oil inched up higher on the back of rising demand. So that's how Brent crude and WTI fared.
All right, so that's how the commodity market shaped up overnight. But let's also take a look at how these three closed yesterday. In fact, the Nifty, this week, of course, the headline is going to be that Nifty was able to sustain that 25,000 level. In fact, yesterday it did manage to close above that. Nifty Bank also closed above that 55,700 mark. On the other hand, mid-cap and small cap indices, they snapped their 3-day gaining streak yesterday and closed lower. Apart from that, if we take a look at the sectoral trend, Pharma was the top sectoral gainer. Realty, meanwhile, advanced for the 4th straight day yesterday. IT sector also advanced for the 3rd straight day yesterday. Apart from that, FMCG, that was trading lower yesterday. In fact, it snapped its 3-day gaining streak. Auto, metal and energy, these were the sectors that also snapped their 3-day gaining streak, apart from FMCG. Apart from that, the banking space, that was also facing some pressure, with PSU banks declining for the 2nd straight day. So that's how largely how the D Street fared yesterday. Ankita.
All right, so that's how the D Street fared. But today, let's take a snapshot of how the FNO universe looks like. Sharad is joining us with the FNO setup. Sharad, take us through, what does the FNO setup look like?
Yesterday's FNO market on the expiry was generally very stable, and also interestingly, both the indices performed well, with support coming in from ICICI Bank as well. India VIX comfortable despite the changes in the global and the domestic cues. The PCI changes also not so much change. If you look at Nifty, there was a short covering happening, very slight open interest decrease. Both highest open interest strike price for put option comes in at 25,000, and for call it is at 26,000 levels. But interestingly, the key EMA levels have been supported for Nifty. Also, Bank Nifty, this activity is also coming in as short covering, and the highest open interest strike prices come for put options at 56,000 as well as 57,000, and for call it remains at only 57,000. Slight decrease has come in the FNO shorts, and this is coming in at almost, you could say, 89 to 90 odd percent, and the DI long positioning that has been falling over the last 5 to 6 sessions. From 70 odd percent it has fallen to 63%. The FNO band, RBL Bank and PG Electroplast are expected to be there, but net the markets are expected to actually have the second straight week of gains coming in.
Alright, so that's how the F&O setup is looking like today. But Sharad, stay on with us and also tell us about all the stocks that you're keeping on your radar today, and we need to watch out in today's trading session.
We have been seeing a lot of promoter encashing happening as per block deals in the recent 3 to 4 odd days, and Apollo Hospitals is also in focus as promoter Sunita Reddy would be selling 1.25% stake worth 1295 crore rupees. The block deal is likely to happen today, and the floor price is currently at the 2% discount of yesterday's closing price at 7,747 rupees per share. Next stock, HUL. The management reject continues in the company as Niranjan Gupta will succeed Ritesh Tiwari as the CFO from 1st November 2025. He himself has had leadership roles over the last 20 years in HUL, and after appointing Priya Nair as the new MD and CEO, this is the new announcement coming in for the CFO position for HUL. Apart from this, positive news flow coming in for Vedanta as they declare their second dividend for FY26, and the dividend is at a 16 rupees per share. The total dividend amounts to 6,256 crore rupees. Record date is set at August 27. Now, recently the company was in focus as NCLT had deferred its demerger hearing to September 17 after objections coming from government and SEBI. Also, Wipro, positive news flow coming in as they have bought an engineering R&D company, Harmanjeet Connected Services, for almost 3,200 crore rupees. This company itself was owned by Samsung as well. And lastly, BSE would be in focus. The stock had taken a beating yesterday after SEBI chairperson's comment coming on extension of longer duration derivatives contract, but it seems like there is something more negative to it. Nand Kumar Saravade has resigned as an independent director. Already we had seen a meeting in the stock, and now another adverse news flow comes in.
All right, moving on then to all the stocks that you need to keep on your radar before today's trading session. For that, I'm joined by my colleague Shrishti Sharma, who's now joining us with all the stocks to watch on for today's trading session. Shrishti, take us through all the stocks.
With Eternal, because that company is going to be in focus as the company has incorporated a wholly owned arm, Blinkit Foods. Do remember that the company did announce about it a while back, and now this particular wholly owned arm has been incorporated. Along with that, select railway counters are going to be in focus as well. First up is actually Texmeco Rail, where the company has bagged worth orders more than 100 crores. So definitely a positive news coming in for Texmeco Rail. But along with that, Titagarh Rail is also going to be in focus. Yet again, an order win coming in for this particular company as the company gets 467 crores of new order wins by GRSC. So that company will also be in focus in today's trading session. So keep an eye on both of these railway counters. But along with that, Yes Bank, a positive news flow coming in as Prashant Kumar gets an extension as the managing director and CEO of the bank till April 2026. So let's watch out for that. And lastly, NTPC Green is also going to be in focus. A bit of a neutral news flow coming in over here as the company arms commissioned capacity of solar energy project in Gujarat. So definitely incrementally positive. So let's watch out for these counters in today's trading session. Back to you.
Thank you so much, Srishti, for taking us through all the stocks that are going to be in focus in today's trading session. But let's shift focus and also take a look at all the cues that we need to watch out for ahead of this trading session today and later in the day. First up, let's start with some domestic cues. Not many domestic cues today apart from forex reserves data that is going to come out later in the day. So something crucial that we'll be watching out for. Now let's shift focus to some global cues. Now in the UK, we'll have the retail sales data that we'll be watching out for and the impact that it has on the stocks. Apart from that, in Japan, the CPI inflation data is also something that we'll be watching out for. Now, in terms of corporate action back home in AGM, so we have Suvain Life, Minda Corp, Ola Electric, Mahanagar Gas, TVS Motor and MRPL. These are the companies that are going to hold their AGMs today. So we'll be watching out for the outcome that they come out with following the AGM. So a couple of stocks to keep on our radar and a few domestic and global cues as well.
All right, so those are the cues that you need to watch out for. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back with more updates on the other side.
Is expected to sell 1.25% stake in the company worth 1,395 crore rupees via a block deal. My colleague Anurag Joshi is now joining us with all the details on this front.
Sunita Reddy, a promoter of Apollo Hospitals, will sell 1.8 million shares in the company through a block deal. The shares on offer in the block deal are 1.25% of the equity stake. The offer size is about $160 million or 1,395 crore rupees, and the offer floor price is at 7,747 rupees a share. The pre-offer promoter holding in Apollo Hospitals is 29.3% of the company's total shareholding, and the placement agent on the deal is Morgan Stanley. The Apollo Hospital block deal comes at a time when several promoters and holders in various companies are monetizing their equity holding in companies through block deals amid gains in the broader equity market.
All right, moving on to the geopolitical front, then External Affairs Minister S. Jaishankar said that India was not the biggest importer of Russian oil and expressed that he was perplexed as New Delhi's purchase of oil from the US had in fact increased. The statements came in as Donald Trump has been putting pressure on India to stop buying oil from Russia, claiming that the move was fueling Russia's aggression against Ukraine. S. Jaishankar meeting Russian Foreign Minister Sergei Lavrov in Moscow yesterday said, "We are a country where the Americans have said for the last few years that we should do everything to stabilize the world energy market, including buying oil from Russia. Incidentally, we also buy oil from the US, and that amount has increased. So honestly, we are very perplexed at the logic of the argument that you had referred to." India's foreign minister said that, and also he met the Russian President Vladimir Putin days after NSA Ajit Doval met Putin. Now listen into what the foreign minister had to say.
Well, I don't want to comment on a person, but let me comment on the subject. We are not the biggest purchasers of Russian oil, that is China. We are not the biggest purchasers of Russian LNG. I'm not sure, but I think that is the European Union. We are not the country which has the biggest trade surge with Russia after 2022. I think there are some countries to the south. We are a country where actually the Americans said for the last few years that we should do everything to stabilize the world energy markets, including buying oil from Russia. Incidentally, we also buy oil from America, and that amount has been increasing. So, quite honestly, we are very perplexed at the logic of the argument that you had referred to. Our meeting allowed a comprehensive review of the entire gamut of India-Russia bilateral relations. We believe that the relations between India and Russia have been among the steadiest of the major relationships in the world after the Second World War. Geopolitical convergence, leadership contacts, and popular sentiment remain its key drivers. On trade and economic cooperation, I followed up with Minister Lavrov the proceedings of the meeting of the Intergovernmental Commission that I chaired with First Deputy Prime Minister Denis Manturov. We reaffirmed our shared ambition to expand bilateral trade in a balanced and sustainable manner, including by increasing India's exports to Russia. This requires swiftly addressing non-tariff barriers and regulatory impediments, enhancing Indian exports to Russia and sectors like pharmaceuticals, agriculture and textiles will certainly help to correct the current imbalance.
All right, so that was the External Affairs Minister on India's exports to and imports from Russia. But moving on, Prime Minister Narendra Modi had a telephonic conversation with French President Emmanuel Macron. The Prime Minister said that they exchanged views on efforts for peaceful resolution of the conflicts in Ukraine and in West Asia. Few days back, the Prime Minister Modi did speak with Russian President Vladimir Putin as well. The Russian President had shared updates with PM Modi regarding the Alaska meet with US President Donald Trump.
All right, moving on then, in a major development shaking up India's digital landscape, the Promotion and Regulation of Online Gaming Bill 2025, passed by both houses of the parliament this week, is set to reshape the online gaming industry, and its ripple effects are already causing waves in the advertising world. Well, the bill introduced by the Union Minister Ashwini Vaishnav imposes a blanket ban on real money gaming platforms, including popular apps. It prohibits any online game involving monetary stakes, whether based on skills or chance, citing concerns over addiction, financial distress and even national security risks like money laundering. Now, violators face steep penalties, up to 3 years in prison or fines of ₹1 crore for operators and up to 2 years or 50 lakh rupees for those advertising such platforms. Well, we also caught up with Prahlad Kakkar, ad maker, to decode the same. Let's go across and listen into what he had to say about this matter.
It's a grey area because legally nobody really knows how liable a celebrity or a brand ambassador or an advertiser is, to be very honest. Because if the advertising party, that is the original owner of the game, indemnifies them legally, then there's nothing you can do about it. You know, the fact that there's an onus of responsibility because of the ethical and the moral issues, that's a completely different issue altogether. So nobody has examined this legally as whether you can actually bring them to court and sue them and fine them and do it legally, you know, without just being a big bully. So if you have to put into a system, it has to be legally tenable.
All right, so those are the expert views coming in on the online gaming bill. But moving on to one of the most important stories also, now paving way for next generation reforms in the 8-year-old GST regime. The group of ministers on rate rationalization have unanimously accepted Centre's proposal to the two-slab structure. Now, the proposal consists of two slabs of 5% and 18% with a special 40% levy on sin goods. Now, all eyes will be on the GST Council, which is likely to meet next month to ensure early implementation of this reform by the time for Diwali is what we are expecting, as promised by Prime Minister Narendra Modi in his Independence Day speech. In fact, we also caught up with the top brass of BKG Foods, Blue Star and FADA to understand the impact of GST rationalization. Let's go across and listen into their comments.
It was a year in which the summer season was impacted. Therefore, there is inventory in the system, and we have been hoping that the festival season will spur the demand, and it is going to happen. And I am very glad this has been done at record time. And I think a few more formalities are left, and in the final form, I suppose it is going to be 18% for air conditioning and air conditioning systems.
We see good rate of volume going up in this category, and simplification of this will also be put up a lot of good money in the hand of all rural, because we will pass on the prices. All the industry players will reduce their MRP, good for the industry and good for Indian consumers. So good for the industry, I think.
This proposal to rationalize slabs is aligned with what FADA's long-standing representation on reducing GST for entry-level vehicles and rationalizing cess, which will improve affordability as well as expand demand in the mid to long term. While there is a proposal to keep luxury item under the 40% bracket. These discussions highlight the importance of balancing fiscal stability with industry growth.
Well, despite the expectations of lower GST slabs for consumer durables, it seems that customers are not holding off purchases to wait for lower prices. What could possibly be weighing in on the minds of the consumers? My colleague Anjali Palod brings you this ground report and some vox pops and a voice of what people really have to say about this.
On Independence Day, the Prime Minister Narendra Modi announced that there will be a Diwali bonanza in the form of GST rationalization, where many goods will move from higher tax slabs to lower ones, and therefore it was anticipated that consumers might just hold off their purchases of various items, including consumer durables, to wait for the new GST slabs. However, we are here in Vijay Sales in Prabha Devi, and what the store manager tells us is that has not happened, and there are a couple of reasons. One is that there is a lack of awareness about how much the GST cuts will be, and there is still some ambiguity on the new tax slabs that will come in. Secondly, the date of implementation is also unclear yet, and because of that, certain purchases that are made for specific purposes such as gifting, or even the purchases made on auspicious occasions. We have Ganesh Chaturthi coming up, even Navratri, and after that Diwali as well. Now, consumers may not hold off their purchases because these are auspicious days when if they want to, they will continue making these purchases. That's the second reason.
These things have happened in the past also, but it has not left any impact. I think people might have forgotten that announcement. But we have not received a single inquiry like this. We want to wait till the GST is reduced. Nor the companies have reacted anything. Our principals, who are our suppliers, even they did not say anything about this. That will be just wait and watch policy. And the most important question is, even if it is reduced, whether a company is passing on that benefit to the end user, that is worth seeing.
It is a welcome move for the citizens. However, the true colors will come only after the documents come into public domain.
Yeah, it's good now, like 28% to 18%. Yeah, it's good for automobiles and all. And on other things like something like for middle class families, good for that.
I am basically from financial services industry, and we look more into capital market products and all those stuff. So we feel that a reduction of GST will basically materialize into more liquidity, more money in the hands of people, and hence it's obviously a feel-good factor for people and in general.
I feel that's not a good step, okay, because already like the businesses and all are suffering, right, from the GST point of view.
Correct.
So I feel a bit more discussion and everything. The faith that the government directly gives the reforms is not better. They should do maybe a session and discuss with real inputs from businessmen and then take these kind of calls.
I think it's a good move by the BJP. At least they are correcting a mistake that they have done.
I'm from insurance sector, so this is a very welcome move, and it was expected, and I think this move will help to penetrate the insurance market in India. So I welcome this move, particularly for the field from which I am belonging.
All right, moving on then, the RBI has released a discussion paper on inflation targeting framework, seeking feedback if headline or core inflation should guide policy framework. My colleague Ankur Mishra is joining us with the details of that.
Yes, Reserve Bank of India has released a discussion paper on a framework of inflation targeting. Remember, the framework was adopted in 2016, and in 2021 we decided to continue with the framework. Now, the next review is due in March 2026, and ahead of that schedule, Reserve Bank of India has asked questions in a consultation paper whether or not this kind of framework should be continued in a manner which it is today. Now, the discussion points remain whether core inflation should remain targeted for policy framework, or we should continue with CPI, which is the current scenario. Apart from that, is there a need to expand the band or narrow the band? Because currently, Reserve Bank of India has a target of 4% as far as CPI is concerned, but with plus minus 2% of tolerance band. In the past, only once it has happened that Reserve Bank of India governor had to write to government for overshooting the target, and that happened for 3 consecutive quarters during the pandemic period. So all this review can be done only after consultation, and the time period given to it is September 18, and after that there might be a decision that there should be a review of this inflation targeting framework or not. But for now, the consultation paper has been released.
All right, so that's the latest on RBI's discussion paper. But Ankur, stay on with us. Sources are telling ET now that SEBI has raided trading guru Avadhut Sathe of Karjat Academy in a crackdown on finfluencers. What are you picking up from your sources? What are the details on this front that we are gathering?
Yes, sources say that market regulator SEBI has raided the Karjat premises of educator Avadhut Sathe, and this has happened on August 21 morning, and it continued on August 21 as well. Now, allegations are that although he was educating through his platforms, but he may be promoting few of the stocks, few of the illiquid stocks in the name of education. Remember, there were norms which were released by market regulator on finfluencers on saying that any of the SEBI registered entity cannot be associated with any of the finfluencers. Although, if you talk about education, that was kept separate. But now we understand that few of the complaints have been received against Avadhut Sathe, and therefore market regulator SEBI is acting on those complaints and investigating Avadhut Sathe. Now, in that search and seizure, we have been told that few of the electronic devices of Avadhut Sathe has been kept by market regulator, and that study may continue for a few days whether or not these allegations are right. But for now, market regulator is going very hard on influencers, on these kind of influencers which are impacting small retail traders, and hence now a fresh action has been taken on them.
All right, moving on to some headlines. Then Prime Minister Narendra Modi is all set to visit Bihar and West Bengal today to inaugurate and lay the foundation of multiple development projects in a big Vikas push for Bihar. PM Modi to roll out 13,000 crore rupees worth of projects spanning health, power, roads, infrastructure and urban development, while he will inaugurate key metro rails projects in Kolkata. And all eyes will be on the Supreme Court today. The top court is ready to pronounce its order on pleas challenging the 11th of August directive that called for removing stray dogs in New Delhi and Delhi NCR to shelter homes.
Next up, the Supreme Court is all set to resume hearing on the SIR petitions, a crucial case that has put the spotlight on voter deletions and electoral rolls. Next up, parts of Kolkata witnessed waterlogging following heavy rainfall in the region. Commuters faced disruptions as several roads and low-lying areas were submerged.
The US and the European Union have released a joint statement detailing the trade deal. The framework unveils details of tariffs on some core sectors including pharmaceuticals, semiconductors and lumber. The US will impose 15% tariffs on European Union exports. The framework reiterates that EU will purchase $750 billion worth of US energy and invest at least an additional $600 billion in the US. And the much-awaited Jackson Hole Symposium has kick-started, and all eyes are on the Fed Chief Jerome Powell's key commentary as he is expected to discuss the path forward on interest rates. He is likely to address the proposed changes to the central bank's framework for economic analysis. Meanwhile, several other policymakers are expected to speak at the three-day event, which brings together representatives of central banks from nearly 40 countries to meet the other business and economic leaders.
Next up, White House trade advisor Peter Navarro turned up the heat on India's role in the Ukraine war. He accused India of refinery profiteering and dubbing it a laundromat, which means self-service laundry for Russian oil. Now, he said, and I quote, "It's nonsense that India needs Russian oil," end quote, and warned that President Donald Trump is unlikely to extend the August 27th deadline for doubling tariffs on India as punishment for buying crude from Moscow. Next up, labor market stress continues in the US. Latest figures show that jobless claims jumped by 11,000 to 2.35 lakh in the second week of August. Now, this is notably higher than economists were predicting, who had expected claims to come in around 2.25 lakh. Also, outstanding claims rose by 30,000 to 19.7 lakh, which is the highest since 2021.
And meanwhile, in other news, China's ambassador to India made a major remark, said China is open to letting Indian goods enter its market. Remember, this will bring major change in the business ties between the two Asian neighbors. He said together India and China can partner in different areas to produce an effective 1+1 bigger than the second. Listen in to the excerpt.
We welcome more Indian commodity to enter the Chinese market. India has a competitive edge in IT, software, and biomedicine, while China is seeing rapid expansion in the fields of electronic manufacturing, infrastructure construction, and new energy. If connected, the two major markets will produce an effective 1+1 bigger than 2. The Chinese side welcomes more Indian enterprises to invest in China. It is also hoped that the Indian side could provide a fair, just, and non-discriminatory business environment for the Chinese enterprises in India.
All right, next up, according to reports, Google has struck a cloud computing deal with Meta worth more than $10 billion. Now, Meta will use Google's cloud servers, storage, networking, and other services under the agreement. Now, this deal will be for 6 years. The development comes after Meta's CEO, Mark Zuckerberg, comments in July that the company would spend hundreds of billions of dollars to build several massive AI data centers. Next up, the shares of Walmart dipped more than 4%, leading to the Dow Jones Industrial Average lower on Thursday, that is yesterday, after the retail giant posted a quarterly profit that missed street expectations, while the company's revenue that outperformed expectations, its earnings per share fell short, underscoring near-term cost pressures. The management, meanwhile, has raised its full-year forecast for revenue growth and adjusted EPS to 3.75% to 4.75% respectively.
And well, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back with more updates on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight.
Coming for Vedanta, as they have declared their second interim dividend of 16 rupees per share for FY26. The first dividend, the number was 7 rupees per share. So the total dividend for this year itself is coming in at 23 odd rupees. Now, so the new dividend announcement, there would be an outflow of almost 6,256 crore rupees, and the important record date for this would be August 27. The dividend history so far, FY24-25, it has been above the 40 mark, and in FY23, it was an outlier with almost 102 rupees per share of dividend being given out. Net, the dividend yield comes in at 12% for Vedanta as per our calculations, but there is a benefit coming for the holding company Vedanta Sources, as they own roughly 56% in the company, and they are expected to get roughly 3,528 crore rupees in form of dividends announced on this. Also, the recent hurdle was there for Vedanta, and despite that, they have announced a strong dividend payout. NCLT deferred the hearing on demerger matter to September 17 after concerns were coming in from government agencies and SEBI as well. But going ahead, the strategic priorities for the company in the coming years will be the timely completion of all the capex projects, the continued deleveraging, and lastly, the interest rate cost reduction.
Thank you, Sharad, for taking us through all those details. But moving on, another stock that is going to be in focus today is HUL, as it has announced more changes in its management after appointing Priya Nair as its new CEO. In fact, yesterday the company announced that Niranjan Gupta will succeed Ritesh Tiwari as the new Chief Financial Officer effective November 1st. Snehi, my colleague, is now joining us with all the details here. Snehi, over to you.
Well, yes, so HUL is going to be in focus once again on the back of management rejig, because remember on 10th July, they had announced a new MD and CEO to replace Rohit Java, and that is Ms. Priya Nair. And yesterday, they've announced a new CFO, and that is going to be Niranjan Gupta, who is going to be succeeding the current CFO, Ritesh Tiwari, with effect from 1st November 2025. And Ritesh Tiwari is going to be promoted internally at the group level, at the parent level, which was along expected lines. Ritesh Tiwari is going to be appointed as the global head of M&A and Treasury Unilever PLC from 1st November, and his role is now going to be based in London. Now, a little bit about the new incoming CFO, Niranjan Gupta. He's not new to the company because he's been with HUL for the last 20 years across several leadership roles, and then he left HUL. He spent 3 years at Vedanta, and following that he spent some time at Hero MotoCorp, where he was first CFO, and then in 2023 he was elevated as the CEO, and now he's making a comeback to HUL in the capacity of a CFO. And on this, Priya Nair has given a statement saying that she's happy to welcome him back to the company, and she's confident that Niranjan Gupta can steer the company towards its next phase of growth. So that's the news flow on HUL. More management rejig underway, and this is largely along expected lines, but well, yes, the stock is going to be in focus today.
Absolutely. So HUL is going to be in focus today. Thanks, Nehi, for all that, all those details there. But before we wrap this edition of Market Cafe, here's a quick look at how Asian markets are faring, how they are shaping up. First up, let's take a look at Japan's Nikkei, which is trading nearly flat with a shade of green, nearly 0.1% higher at that 42,668 level. Next up, we have the Hong Kong's Hang Seng Index, which is also trading about 0.3% higher at the 25,180 odd level. Apart from that, we have China's Shanghai Index, which is also trading higher, 0.2% higher at the 3,780 level as we speak. Apart from that, only ASX 200, that is the Australian index, that is the one that is continuing to trade in the red, about 0.2% lower. Apart from that, the Indian markets, they're also expected to start on a muted note with a negative bias, is what we are penciling in. But with that, we're completely timed out in this edition of Market Cafe. But don't go anywhere, as the market will take all the action forward.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter. It's not about left or right. It's about what's